Hello, everybody, and welcome. This is Mark Newton. Today's the end, of course, of the month of June, doing our third live technical analysis webinar. I want to thank everybody for your support. Thank you for joining us today. A couple words of note. First is that, of course, I truly value all your support, and I want to thank you, of course, for tuning in to these webinars where I get a chance to sort of show you how I look at the world. We talk about different stocks of interest. Also, I'm going to be covering a lot of my favorite longs and shorts towards the end of this, and I know there's big demand for that. And so we'll talk about probably your top 50 or so names, and then we'll get right into some of the longs and shorts. Finally, for those that are new, it is important that you go on to the website at FSInsight.com/technical strategy and cast your upvotes. These are very important. It allows me to see really what's most popular and what you want me to talk about. So each and every month, where I would recommend that you get on and really cast your votes. And it's really going to be those things that I'm going to be talking about every month. Without further ado, let's jump right in. And I just thought I'd start off really by talking about a couple of the major indices. I know that's really a big topic. Everybody is talking about the same thing as now we're ending, the first half of the year, ending the quarter on a very bad note. The S&P continues to show further evidence of weakening. People wonder, when exactly can this market bottom? And my thinking is that we're getting very, very close, but that likely is going to happen into the month of July. And I had shown some cycle charts, and I'll cover some of those right at the end. But I thought that, initially we've seen, last week was actually a positive week. And here's just a chart of S&P shown in futures form. You see that we got, each one of these little drawdowns held at critical Fibonacci points before moving lower. So the first one, 0.236 held, we bounced, and then we pulled back to 0.382. My thinking is we could, in fact, test the 50% retracement of the entire move up from 2020. That would take us down to 3505. I do think that's going to be a maximum area of weakness into next month. And I think that, any sort of pullback over the next few weeks should give us a chance to cover shorts, buy, and expect the second half of the year is going to be much brighter. So that's just one chart. Here's another one, S&P, and we just look at a daily chart and how this has transpired. And we see that, we continue to be in this most recent downtrend with a trend of lower highs, lower lows. Our most recent bounce hit about exactly 50% of the drawdown, filled this minor gap. There were some price and time considerations as to why we should roll over. And that was based not only on Elliott, but also based on some Gann analysis, and suggests that really, market should be in the process of pulling back to test, if not breach, these lows. So, that level was right down near 36.36. So I'll, come out and say that I think that 36.36 is likely tested before markets get above yesterday's highs, which in S&P cash was 39.45.86. Heading into the July 4th holiday, it's usually a time when we can try to stabilize and rally a little bit. So heading into this last final couple days of the month and quarter, it wouldn't be unusual to see some sort of a stalling out process like we're seeing. But my thinking is, just when looking at an hourly process, that we're not likely going to take out this prior peak. And this was actually from yesterday on the right-hand side of this chart. So any sort of bounce likely is going to hold, and then we start to turn down a bit more sharply. And so that's going to be the real key, is really looking for evidence either of 36.36 undercut, or any move above, not only yesterday's highs, but something that might break this downtrend. And for now, that's really nowhere in sight. So for the Qs, my thinking is that also in similar fashion, we should not really take out prior peaks, and that would be right near 297 before we pull back and challenge 268. Below that would get us down towards really 260. The value line is often an interesting index to look at, and I talked about this all last year, only because an equal weighted way of looking at the market tends to be a lot more accurate when you take out all the FANG stocks. And we see that the market largely started to flatten out last spring, which a lot of people realize. But of course, when you just look at the S&P, the NASDAQ, we peaked out in the month of January. So that was really, really an interesting, way to look at things, and that the market largely had started to flatten. The NASDAQ composite, the transports, the Russell all peaked out in the month of mid-November when, I did some analysis, and Tom Lee shared that on CNBC that we thought the market might be peaking out. And that was, of course, reinforced back in January. So my target for June was 38.15. And that's what's interesting, is that we're literally right there today, but I don't think we're done yet. And I think that, as of the break last week, it made me really change my thought process a little bit and think that we probably have a little bit more to go. But the sentiment has gotten so extraordinarily bearish that I think it is getting very, very close. We're already starting to see some divergences line up. And I think that is what's key, is that, when you look at, the value line getting close to a 50% retracement, the S&P, of course, showing a little bit evidence finally of a little bit of positive divergence and momentum. That's a key part of the process. So we combine, we're close to getting DeMark exhaustion, where sentiment clearly is bearish. Cycles tend to bottom out during this time between June and July and turn higher into September. So there's no saying that the bear market has to be over and we go back to new highs and everything is great. But I think we're getting very, very close to a time when we're going to want to really buy into this. And I would really say that I've gone from trying to, be aggressive about selling rallies to really concentrating on buying dips, and think that markets can bottom out in the next few weeks. And that should happen before the Fed meeting, and we can start to turn higher. Let's talk about the first stock that was really the highest ranked stock of this entire upvoting process, was Amazon. And we see that, on a long-term basis, the stock continues to be one that's sort of holding near pretty key trend line support going back over the last 6 years. This level continues to be important. I can't say with a lot of confidence that it has to hold based on the structure, only because after a big pullback and a lot of churning, this pattern is still really not all that positive. And if anything, we still likely can pull back to test, if not break, that level, which means, of course, the longer term trend could be broken in Amazon for the first time in 6 years. I'm willing to bet that lows are not too far below this level, but this is going to be the first really key area of support. Is going to be down near 101. And if that is tested over the next couple of weeks, I think it probably will give way, because that's not really a very bullish formation in the near term to suggest that this bottoms. But I do think it's tested. We probably have a brief undercut of that. And then, we'll take a look at what some of the exhaustion indicators say in the next few weeks. But right now, it's just tough to put a bottom in this. I think if we were to get above 130, as I've always tried to relay, it's really the act of getting back above this last meaningful low in the pattern that can provide some optimism that the stock truly has bottomed. And for now, we broke it, we retested, we pulled back. There's just not enough there, unfortunately, to say the stock has bottomed. If anything, it's in a short-term sideways grinding process. I would say that, many of the FANG names have held up a great deal better than the broader market, and some of them have held May lows. And so that is one thing to sort of hang our hats on, and that it has held up a bit better. And I think the rolling over in rates certainly helped. My thinking is we can actually turn higher in interest rates between now and the middle part of July. So that could cause the final leg of this washout as the dollar and yields both turn higher. That would also cause many commodities to start to roll over, in my view. And this time, the base metals and the grains will be met with more selling, in crude oil and also in the precious metals. And so we'll talk about that a little bit more in a minute. The second one is AMD. So not a very good day today in semis. We're breaking down in a lot of these names. AMD now below 80. This is a clear violation of support that's held really. It held honestly last week, but we'd really, we're right near the lows from April. And so now that's been taken out. So, you really have to say the next meaningful level to consider this is going to be down in the low 70s, which, is about a little less than 10% down, but still that's a meaningful level. If you look at the past in AMD going back since September of 20, we've had a lot of different lows that have happened right near this time frame. So we're getting near, but at 77, there's not much between 77 and 71. So that's my target between now and mid to late July. I think that AMD likely does get down there, and I would use that pullback to consider buying dips. Nvidia, similar fashion. Nvidia, as of now, just starting to show evidence of trying to break these levels. Now, this hasn't happened as of yet. Nvidia is holding up a bit better than AMD, and so that's going to be right near 153. So a break of 153.28 on a close, that being the lows from back on the 17th, that's going to be very negative in the short run and would cause a pullback, likely down near 140 or down likely a bit below. I'm not certain that this needs to get down as far as March lows of last year, but this looks to be the final stage of this bottoming out process where it's more of a fourth wave triangle and it's now starting to turn lower for its final move down. So I think it's getting close. We tried to make a case of buying dips here based on equal wave equality, and that didn't work out. I mean, we're still sort of churning, but the stock is still quite weak, and I think we probably have a little bit more to go on the downside. What would change that view? Well, if we start to show evidence really of this entire downtrend just since the latter part of March, early April being broken. You note that the first rally off the lows held prior lows, turned down. The little bounce was even less robust, held this downtrend line. So the first sign is going to be really a break of that downtrend. So if we take out really the peaks from earlier in this week, right near 170, 140, that would be the first encouraging sign for Nvidia. Until that, my thinking is we're probably going to revisit the lows. Alphabet and or Google really stalled out right near prior highs, so that's important. We didn't even get up as high as these prior lows, which is really keeps the stock a little bit in a negative downtrend. But you can notice that in the bigger scheme of things, this really did not show nearly as much weakness as many other parts of technology. I just have a difficult time in embracing a pattern like this until we show some evidence of getting back up above 2,400, or my thinking is any pullback down to 21 could cause some consolidation. This is going to be the key level of these prior lows. One is 2,100. Of course, the other is right down near 2,037. For now, it's range bound with a bearish bias. I do think we get a little bit lower over the next couple of weeks, but I'd be inclined to buy into Alphabet. Apple, similar to some of these other stocks, we note that the downtrend's still intact. So when you rally, it's always important to look back at these multi-month uptrends or downtrends to try to find evidence of support or resistance. In this case, the stock rallied right up to a key area, failed, rallied up again, that also failed. If we get up above, 143.50, I'd be encouraged by Apple. I'm not sure if that happens right away. So I think this is probably setting up for a little bit further weakness over the next few weeks. This is going to be a key level for Apple is 129, but it's broken. Then I don't have much until around 118, but that would be a rather severe move for this very important part of, the S&P and the Qs. And, if anything, any further weakness in this should be a buying opportunity into the third week of July. But one really wants to watch this trend for evidence of being broken. For now, still very much intact. Stock has rallied over the last week. Now we stalled out right near a key level. This is also a key part of why, I thought that the S&P might break down before getting up to near 4,000. As you look at stocks like Apple, they're so important. And Apple did hit resistance. The S&P did not. The Qs, of course, also did. So these charts are very similar in that respect. Also, the Qs peaked out right where they needed to. Tesla. Unfortunately, this has been a little bit range bound over the last couple months, which I guess is a source of optimism only because, we started to hold up relatively better. I would note that this is still going to be pretty range bound in the short run until we can find signs of this little range being broken. And so that's going to really cause, 626 to be important. Below that, if 626 is broken, then 620 won't really matter. It likely is going to get under that and will pull back to the mid to high 500s. So, that's going to be the real key for this is, anytime you see a low like that, where you see a decent bounce off the lows, it's always important to keep that in mind for where the stock can stabilize and what happens when, in fact, this is starting to show evidence of weakness. Microsoft also, really held where it needed to, starting to pull back. So 270 key level on the upside. If that's broken, that would make me a little more bullish. For now, I'm expecting actually a pullback to challenge 241. If rates start to turn up, and I know the last couple of days we've seen a little bit of weakness again in rates, but I think that proves short-lived. I think that we are going to push up towards 350, 360, and that can be the catalyst for the final leg down of the tech decline. And that's going to be something to really look to buy into next month, because I do think we're close to peaking out in the bigger scheme of things in rates. And so, but I don't think it's begun all that just yet. I think that the move down was only a 3-wave decline in 10-year rates. And I think that we're likely going to try to stabilize and turn back higher. That's my thinking. As the market gets clearer to bottoming, and I think that should happen by, I'm thinking probably the third week in July. I'm going to be rolling out a long list of ones that I'm going to manage, and actually we'll keep track of these longs. So I'm always going to try to present longs and shorts, but those will be ones that I'll just sort of buy and hold and manage and try to make sure that we're all in, the best stocks that we can be, not only on the long side or also on the short side. And we'll hope that we can recover as much as we can. I saw the Ned Davis seasonality chart, and interestingly enough, its cycle projection is almost exactly the same as the ones I've been following. It uses a 1 year, a 4 year, and also a 10 year. Those line up specifically with what I'm looking at, which is largely a lot of different cycles, a lot of the years of harmonics that line up with 2022 being 2002, 1962, looking at 90-year cycles, 120-year cycles. All those years we bottomed out right near the month of July. So that's why in 1962 was late June. I think that we're very, very close, folks, but it doesn't look like we're there yet. Any final move to new lows should drive the so-called capitulation, and that puts in a low. And so let's keep our eyes peeled and not get too negative. There will be some opportunity for longs coming up soon. I know that everybody's thinking and knowing that earnings revisions have to come down. I think that's largely going to be baked in, and the market's already taken as much as it can take. And there's going to be some good news around the corner, I think. So, or maybe it's bad news in the economy, which is going to be good news for the stock market. Have a great 4th of July, everybody. For those that are celebrating, thank you for tuning in. That's all for today. I did run over, and hopefully you got some value out of that. So thank you, and we'll look forward to next month. So take care.